Uptrend, downtrend, and sideways trend. What, how do you trade these? We'll check out in this video. So welcome to Whale Capital again, and in this video we're going to look at how market structure is important and how you can trade each uptrend, downtrend, and sideways trend, and what to avoid in that. So again, I'm not a SEBI registered advisor. I'm just a trader, and I'm here to give you all the information that you need to trade in the markets, but you need to do your own research. Okay, we looked in the previous introduction to technical analysis video that how one can identify trends from a basic standpoint. So before we get into how to identify trends, we need to see what are uptrends. So in this diagram, you can see what uptrend is. So this is a series of higher highs, higher lows, and what is a downtrend? It is a series of lower highs, lower lows, lower highs, and lower lows. And what a sideways trend is, or what we call choppy market, is market moving in a range, one single range. So in the market, most of the times what happens is market goes in an uptrend, goes in a sideways trend, again it goes in an uptrend, it goes in a sideways trend, and the same for downtrend as well. So most of the times the market is in sideways trend. That is why you need to be careful while trading. So why market structure matters? So market structure tells you which direction to trade in so that you are not swimming against the current. That is very important. You should always go with the flow, as they say, and that is true in trading as well. So if the overall higher time frame structure is uptrend, what you should do is you should also go uptrend. Your trade should be long. If it is a downtrend, you should go with the flow and you should trade. Uh, you should go with the flow and sell or short. So market goes into three directions. As I said, it goes up, it goes down, and it stays flat in a band. Okay, this is what an uptrend is. As I said, a series of higher highs, higher lows, and a series of higher highs, higher lows, and it it goes to a point and then it makes a sideways movement. Similarly, what a downtrend is, it is bearish and it makes a series of lower highs, lower lows, lower highs, lower lows. And in a downtrend, the sellers are dominant, and in the uptrend, buyers are dominant. So this is what we call ranging or consolidation. This usually happens after an uptrend or after an downtrend, and 70% of the time, or I would say 60% of the time, the market is in a sideways trend. So this is a specific band, and between this the price moves. This is where the buyers and sellers have almost equal strengths. So what we were seeing for the past 3 months, Nifty has been moving in one band from 25,800 to 26,200. So that we can call a sideways market. So there is no clear direction where the market is going, and I would suggest one to not invest or trade in these kinds of market if you're absolutely sure what you're doing. So this is the most important thing that we need to check, what a break of structure is. So uh, when a market is in uptrend and a break of structure happens, the market, so that is mostly a turning point of the market, and it can go sideways, either sideways or it can go downtrend. So you should be careful of where the break of structure is. I will make a separate video of break of structure because it is very important while trading. So but this is just the basics that I'm telling you. If a stock is in uptrend and if some candlestick pattern forms, say a bearish hammer, that is where the break of structure happens. This is just an example. I'll explain this in future videos. So one of the most important things while looking at trend analysis is time frame study. So uh, let's take an example of IDFC First Bank. So what this says is, even if you're looking at a 5 minute chart on the candlestick and a daily chart, it could tell you entirely different stories. So what that means is, IDFC chart is, so this is the daily chart, and as you can see, it has been going in an uptrend. This is an uptrend. But if you look at the 5 minute chart, the story is entirely different. You can see that for 2nd of Jan, you can see the market had moved 1.2% down. So this is what I call, this is what you should keep in mind. You should study all the time frames, and while taking a trade, you should look at the all different time frames. So I mostly do swing trading, and to take a decision in swing trading, what I mostly do is I look at a overall structure at a higher time frame, say daily, and I put my entries from a hourly standpoint. I don't intraday. I don't do intraday trading. So daily time frame is what I use to see what the trend of the stock is, and hourly time frame is what I use to put my entries. So this is what you need to keep in mind, that just looking at one time frame is not enough. You need to check different time frames. So mostly people use 5 minute if they are doing intraday trading. I won't suggest that. I'll say stick to hourly, 4 hour day and week for swing trading. And yeah, so this is one more important thing, that never ever go against the trend of the higher time frame. So uh, it will be tempting for you to go short on in the IDFC First Bank here, looking at this chart, but always check the higher time frame. And if the higher time frame is largely a strong uptrend, you shouldn't go short on this stock. So again, so this is how you trade different trends. For uptrend, I have taken the example of again IDFC Bank, and for downtrend, I have taken example of India Mart. So what you should do is, so here it says that look for entries at higher low. So higher low is what? So this is a low that was formed. Then the market went up, and this is the higher low. What your ideal entry should be is when there is a swing and the market comes down, and you know that the overall trend is positive, your entry should be here. And let's look at bearish example. So you know that overall trend is bearish. So what your so in a downtrend strategy, look at entries at lower high. So this, the market came down, and this is a lower high from this. As compared to this is a lower high, and your entries for short position should be here, around here. And there would be many videos on this, but to confirm that your entry is perfect or not, you should always look at different moving averages. I mostly use 50-day moving average. So this black line is 50-day moving average. And so how to confirm that, if so this is a lower high that was made, and it was just around the 50-day moving average, and then it retraced back. So this is what you're looking for in while trading. So if it is confirmed by 50-day moving average, you can take that trade. Similarly for IDFC First Bank, like I said, here it is closer to the 50-day moving average, and here you can take a long position. Uh, so this is not a guarantee in a trade. This increases the probability of your trades, I would say. So you should. So this is a basic idea how you can trade the trends. Okay, to summarize what this video was, that uptrend is a series of higher highs and higher lows, and you should buy the dips. Or what is a downtrend? It is a series of lower highs and lower lows, and you should sell the rallies. In the Indian market, you cannot take short positions, and you cannot carry them. You can take short positions for the day, and you need to square them off that day itself. So I wouldn't suggest that for novice traders to do short selling. In a sideways trend, I would suggest most of the people not to trade, because it is a risky game and the market could turn anytime. Uh, and most of the time the markets are sideways. So you need to learn how to set out of the market. So taking no position is also a position, because you're not losing money. Uh, Also, like I mentioned, never ever go against the higher time frames. Like I gave the example of IDFC First Bank. So the 5 minute chart was tempting you to take a short trade, but the overall daily trend was positive. You shouldn't go short there. You should always look for a long trend or a buy trend. Okay, so this is what I learned from where I this is where I learned from my professors and where I worked. So my boss used to teach me this. He used to tell me that just sit in front of charts, just analyze the how the price moves, and once you start looking at it, it becomes second nature to you to understand what the trend is, where the highs, lows are, what a swing is, and what the market could do next. And I would suggest that the what I tell you, the stocks and indices that I tell you to watch, I would suggest you to study these indices and stocks. So for this week, I've selected these two indices, this index and this stock. So midcap Nifty, midcap Select Nifty, and Cummins India. So these are. I would suggest that you do the analysis and let me know in the comment section what you think about the stock and how it will move. Yes, that is it for this video. If you like the video, please subscribe and share with people who you think that would like to learn more about trading.